Hello, everyone. We are Group 3, consisting of Ayame, Cameron, Calvin, Carl, and Y, and welcome to our presentation on Michael Porter's Five Forces, where the company we chose to talk about was Neo Financial. So, a little bit about Neo Financial. Based out of Calgary, they are a financial technology startup company that aims to rework how Canadians did banking, offering services towards investments, mortgage, and many more. They have offices situated across Canada, including but not limited to Calgary, Toronto, Winnipeg, Saskatoon, Halifax, Edmonton, Vancouver, and many more. Neo Financial was founded by four people: Andrew Chow, Chris Semer, Jeff Adamson, and Chris Reed, two of which actually also founded Skip the Dishes, being Andrew Chow and Chris Semer. And a fun fact, on May 5th, 2022, approximately 3 years after their founding in 2019, they were valued at $1 billion after securing a 185 million Canadian dollar after securing 185 million Canadian dollars in a Series C fundraising round, bringing the firm to unicorn status.
Okay, so I'm going to talk about Neo Financial's products. So their current lineup is the Neo Card, Neo Money is their savings account, Neo Invest is their private wealth management platform, Neo Mortgage is their no commission mortgage brokerage, and they also have a co-branded MasterCard with Hudson's Bay, and of course they have their Neo Financial app, which you can use to access all of these things. So they position themselves as a one-stop shop, and they are wanting to add a few new services in the future, like credit monitoring, a crypto coin called Neo Crypto, and a Neo Store, which will add more rewards for their credit cards. On to their primary competitive strategy, they go with differentiation. They're trying to set themselves apart from the rest of the financial industry. As a fintech startup, they're trying to disrupt the old guard of the industry. They market themselves as not a bank. So their big quote is, "What if the future of banking wasn't a bank?" But of course, they offer the same services, but they're embracing newer technology, and they're claiming that other banks are stodgy and old school. And they're trying to target a younger demographic with their youthful and hip brand.
Right, so next is the threat of new entrants. The threat of new entrants in the banking industry is it's pretty low, since the barrier for entry on financial institutions is inherently high. It's pretty hard to establish yourself in the financial industry, because a lot of what you're doing is building trust and trust with the consumers. Trust is a massive factor in consumers giving companies money. You're not just going to go out and give your money to these companies that you don't trust at all. So, that said, with the threat of new entrants being low, that also makes the threat of substitutes quite high, since most people would rather go with an established or trusted name such as RBC or Cambrian before a startup like the ones listed here. For them to compete with these larger banks, they have to compete in multiple fields. It's not just having a place to put your money. It's credit cards, it's loans, it's all these other small things that the banks do to be competitive with each other. And even though like the small banks, they're easy to create and maintain, financial institutions, like ones that entail all these small little working parts, they're difficult to get going. Moving on now.
Neo Financial services are typically backed by their business partners, Neo Card being assisted by MasterCard, Neo Money by Concentra, Neo Invest by OneVest, and Neo Mortgage by ATB Financial. Given that they are partners as opposed to suppliers, they have little to force Neo Financial to their knees. MasterCard can't hold the Neo Card hostage, ATB Financial can't put pressure on Neo Mortgage. Neo has very few supply inputs, which don't even cover their primary services. With Neo being backed by strong and reliable suppliers, while also leaving little room for suppliers to hold them hostage, their supplier power is very low.
Right. I'm going to talk about customer power now. So customers have kind of a massive amount of power in the banking industry. Having more clients is kind of the key to success. I mean, this is really the case in every industry, but for banks, it's even more so. So, as you probably know, banks use your money that you have deposited to them for their own investments and their own business ventures, and they typically don't hold a lot of that on hand at any given moment. So, say everyone were to take all their money out at the same time, nobody would. They wouldn't really have enough for that. That being said, the kind of key to success here is customer retention. Banks are kind of willing to do just about anything to get new customers and keep their customers. So I'm sure you see incentives from like RBC where they give you a free iPad or like a trip or something for switching to them. And it's kind of this uphill battle between startups and these giants that have the money to throw at ventures like that. A strategy most banks use for customer retention is just building trust. Obviously, if you trust your bank, you're not going to want to switch. And banks obviously kind of make it hard to switch away from them just for that reason. Tying back into that, we've got the threat of substitutes. Every bank kind of tries to excel in at least one way. So, like, they could have good analytics, they could have a good online presence, maybe a good online portal. They could be easy to use. This leads to the industry kind of working off of diversification and innovation, as most industries do. The twist kind of comes when human psychology comes into it. Customers really know how much power they have to these banks, and if they're not getting what they need out of their current bank, they will switch because they usually have an incentive to do that. Another small thing I want to touch on is that last point there. These micro replacements are taking place within the banking industry, where these smaller companies or these larger companies will come in and they'll grab a little piece of that financial industry and pull it away. So this is we've seen this pretty recently with payment providers. So PayPal being a platform and sales focused payment provider, and then Apple Pay being a mobile payment provider. So every little sector of the financial industry is kind of subject to being pulled away at any given moment. Right? Moving on.
Right, now let's talk about the degree of rivalry among competitors. We think the degree is medium, and here is why. Neo Financial is a new type of banking or financial service provider, but they are not the first one. In fact, there are already several players in the market. However, as mentioned in the threat of new entrants, the entry barrier is high, so the number of competitor is not that big, just a few companies. But interestingly, some of their competitors are fintech startup just like Neo, but some of them are really, really big, like Tangerine, because their parent company is actually Scotiabank, one of the big 5 banks in Canada. And from the consumer point of view, the switching cost is really low. I believe that many of us own more than one bank account or credit card account. And we can open accounts for every single company here in just a few minutes. If Neo made any mistakes in their app, people might switch to another one easily. And companies are not easy to quit the industry due to the high exit barriers. As mentioned before, it's a financial company. It involves tons of troubles and capital to start a company like this. And last but not least, although there are a few competitors out there, not all of them are competing with Neo in all areas of products. As you can see in this table, Koho EQBank's Wealth Sample, they don't provide one of the hero products of Neo, credit card. And some of them might provide a prepaid card, although it's a MasterCard, but that's different. It's not a real credit card. So Koho doesn't even offer investment and or mortgage services. So the rivalry among the competitors might not be that high after all.
To summarize, young Canadians are attracted to Neo just because they are their main consumer that they are targeting. Since most consumers already have existing services from other banks, it may be hard for Neo to get these older Canadians to switch. their financial services. And Neo needs to be able to provide exceptional service as well as competing with the prices of opening and maintaining accounts at various banks. And fun fact, Neo doesn't actually charge you for opening a card or any accounts, and there are no maintenance fees for those. So that is one of their main attractions for these young consumers, as well as they market themselves as not a bank, and they claim they are remodernizing how Canadians should spend, save, and grow their money. And they also have like cashbacks, rewards that's instant. So if you're spending, you would see that instant cash back on your account. And their main consumer attraction is their products that are partnered by MasterCard, Concentra, OneVest, and ATB Financial. And consumers are accumulating over time. As of May 2022, they have reached over 1 million customers. So they are not doing too bad for a startup company, and I'm sure that as more people hear about Neo Financial, they are going to gain even more customers. Even myself is starting to get attracted to their banking system. I think it's a good way to use your money, because everything is in one place where you could spend and save and see your account. And here are our sources. And thank you for listening.